I don't know whether the parallels, right, between GameStop and some of the Reddit action can really directly transfer to silver, because it's a different market, and actually the positions from a lot of the hedge funds were completely different.
Well, I think when we look at the silver market, the one thing to keep in mind, it is a lot larger than these equity markets. You put the total amount of open interest of silver, including both above ground and below ground, somewhere in that $200 billion range on an annual output basis. That is substantially larger. And as a result, to corner the market and create a short squeeze, we estimate it require each one of these Wall Street individuals to accumulate positions of somewhere around 4,200 ounces. That's a lot of silver, and where are you going to put it? So the analogy to, let's say, the Hunt brothers or Thursday, Silver Thursday, I think, are far stretched. And also, let's not forget, because of the Hunt brothers squeeze back in 1980, there are regulatory policies put in place that prevent a replication of that, i.e. position limits. So to see a similar type of dynamic take place in a macro market, we see it as extremely unlikely.
So, Jeff, what are you expecting silver to go from here until the end of the year?
Our target is $30 an ounce, really being driven by a combination of a stronger gold market, as well as the solar panel demand, or call it the green capex, driving prices. Now, we do expect, if you see the Biden administration approve its solar ambitions, that target would move to $33 an ounce. Now, given the market's trading in that, $27, $28 an ounce, it means there's a real fundamental story here. We like silver. However, we don't like it because of a short squeeze. We like it because of the fundamental story behind it.
Jeff Currie, you were mentioning as we went into this interview about Jennings Bryan, 1896, and the cross of gold. Let's talk about the cross of silver right now, which is the fixation of the public on trading commodities versus the fundamental story around tangible assets. You've always weighted the fundamental story. Is that a dated view? Do you have to shift and be more supple in your thinking about the speculative market of tangible assets?
Well, when we think about the fundamental story of commodities in real assets more broadly, part of the reason we never saw a commodity bull market over the last, let's say, 12 to 15 years is because we never saw significant demand for commodities. What we think that these populist movements are likely to do is create an environment in which governments start spending, particularly on lower income households, that will create that demand for commodities and goods more broadly and create a more cyclical, commodity intensive economic backdrop. And that really sits at the core of our bullish view on commodities as we see REV policies, redistributional policies, environmental policies like environmental capex, and versatility in supply chains. And these things are very much related. I think I can use green leveling, spending on green capex to level income. These types of expenditure programs are really going to be behind our bullish view on commodities.
Your bullish view on commodities has been noted. There's some people pushing against you, Jeff Currie. It seems like it's just guarded, and you're out 2 standard deviations through the trend. It's a really remarkable breakout of the long-term resistance that we've seen. Reaffirm the magnitude of the movement you believe we will see.
Yeah, I would put it on par to the bull market we saw in the 70s or the bull market we saw in the 2000s. I would say this is more akin to what we saw in the 70s to the 2000s. Why? Our redistributional policies back then were the Great Society, the war on poverty. RE, environmental policies. You had the war on acid rain, Clean Air Act. You had the Clean Water Acts. Lots of spending on environmental policy back then. And then our versatility in supply chains or resiliency in supply chains. Then you had the Cold War with Russia. Now we have a quasi-Cold War with China that can require spending. In fact, the big move in agriculture that we have seen over the last week is buying by the Chinese. they're building strategic reserves of grains, very similar to what the US and Europeans did back in the 70s when they built their strategic reserves. So, the analogy here and the magnitude is probably something more similar to the super cycle of the 70s than the one of the 2000s.